Another question which I'm sure you've been asked, and I know you have probably studied, looked at this in a lot of detail. Is a housing crash looming in your opinion, based on all of your research? Because I know you'd have researched it inside out.
Do you know what, Shaz? I don't think anybody can answer that question. I think all of these predictions that are made, some people are right sometimes, but they are not consistently right. They'll be lucky. So, you know, these people who think they can time the market, there's only two types of investor, really. Those who can't time the market and those who know they can't time the market. So, you know, for me, you know, it's such a difficult thing to predict, but, you know, you also must have a bit of an opinion of where you sort of feel like you are in the cycle. And obviously over the last 6 months, it's just felt to me like, you know, we're heading for a fall at the end. I thought now houses will be dropping, but of course what you cannot predict is what the Chancellor's going to do with things like stamp duty and pushing loads of money into the economy with furlough and bounce back loans and grants and all that stuff. And, you know, it looked like all that was ending, and then about 2 weeks ago he did the same thing again. He sort of expanded the job retention scheme, or similar, you know, sort of new furlough scheme. And the stamp duty sort of exemption or sort of holiday is still there till March. So, you know, lots of people say, oh, at the end of March it's all going to go wrong. Well, who's to say it doesn't you know, extend it again? Who's to say that there isn't some form of other support by then? Who's to say that the fact that, you know, the vaccine's on its way, well, the full-scale vaccination programme hasn't started in the spring for those that are vulnerable, and therefore, you know, confidence is starting to return sufficiently. So the banks are still lending. They're still sort of piling the money out, and I think the government is, in many ways, they seem to have enough control of them. They managed to stop them paying dividends out, and sort of, I think they've told them they might be able to start paying dividends again out, but they're only going to be allowed to do it if their sort of net lending continues to increase. It's quite clever, really. Yeah. So there are all these factors and things that are going on in the background, which you can't, you don't, you know, they're yet to be determined. The Chancellor has probably not decided himself what he's going to do with all the next things. So it does feel like, you know, the property market shouldn't have been going up the last 6 months, but it has. It's gone up a lot. So the risk feels like it's down to, you know, it's on the downside, and I'd want a really, really good deal to do a deal. But it doesn't mean it is going to go down. And no one actually knows. So what you're better doing is buying stuff. A better strategy is buying stuff, you know, for a really good price, adding value, making sure it yields really well, stripping a good chunk, if not all, of your money back, and then just keeping it for the rest of your life. And, you know, you'll pound cost average it anyway. So, yeah, you're definitely going to come out the right side if you have that strategy.
So, linked with that, because I think you made some good points there. If somebody's thinking of buying property now, is your view or advice to them, I use the word advice loosely, that they should go ahead but make sure they get some good deals, or is your advice sit back and wait until the end of March, see what happens, and then judge where the market's going?
I've used the period between now and, say, the spring to get really good, learn everything you need to learn, you know, get out there, view loads of properties, meet up with the agents, and start sort of, you know, building all those relationships and bidding low, because eventually something's going to pop out. It's going to take you several months to get all that rolling anyway. So by the time, if it happens, that, you know, stuff does drop, and it's by no means a guarantee, then you're going to be ready. And if it doesn't happen, I would have thought, you know, spring onwards, the risk of a market collapse reduces, I suppose, relatively significantly. Yeah. Because I would have thought, as there's a vaccine and the balance moves with more therapies coming online and more knowledge about, you know, how to treat the disease, there'll be less and less risk of lockdown, like what's happening in France today. Stock market's dropped a lot, and you know, businesses will be able to get back to normal, and therefore there isn't this sort of sword of Damocles as I don't know, exists at the moment, of a risk of huge rates of unemployment. You know, there's I suppose the central prediction was, until sort of the scheme got extended a couple of weeks ago, was that we were going to have another 1 million people unemployed by Christmas. So we're going from 1.5 million unemployed to 2.5, which is a huge jump, almost to the level of the previous credit crunch, over a very short period of time. Now, if the risk of that happening can be taken off the table, then you would have thought that the risk of the housing market collapse subsides significantly.